Hi friends, are you able to hear me? Yeah, can someone please confirm if you're able to hear me? Okay, so I have one close friend called Sagar, is calling me sir. So Sagar, please do not call me sir, as we are very close and I don't even want someone to call me sir. Okay, jokes apart. All right. Okay, let's jump onto the session. So I have to just complete the session within like another 30 minutes. So let's not extend the session to 45 1 hour. Okay. I'll present my screen. Okay. Right. All right. Oh, so you guys are able to see my screen, right? Can you quickly say yes so that we can just jumpstart with the session? Okay. All right. Okay. So we have 32 participants. So let's not waste the time. So I'll quickly start with the session. This session is all about, does the Holy Grail exist for the retailers in stock market? I think this is going to be like very interesting session. Okay. So I'm not a big trader who can say that there is a Holy Grail exists, but based on my experience, I would definitely say yes, it exists, but for the smart traders and not for the gamblers. All right, let me take it to the next screen. See, Holy Grail has to be created on your own. So do not assume within this presentation or video I'm just going to tell you Holy Grail. Yes, there is a Holy Grail, but 100% you can create your own Holy Grail, provided you have that learning scope, right? You explore the market. This video is all about how to create that Holy Grail. All right, and with a note, right, I would say only 1% traders enjoy this. See, when I say enjoy this, is that 1% successful community trader. We say, right, 99% of the retailers tend to lose the money, and only 1%. It is not even 1%. I would say less than 1%. If you look at Zerodha, the CEO of Zerodha, right, Nitin Kamath, I believe, even he said in one of the statements saying that less than 1% people tend to make more than the fixed deposit interest. So meaning like 3%, 4%. So I would say rather less than 1%. Right? With this note, I can say the 1% people, right, enjoy this. When I say enjoy this, yes, they are the Holy Grail, because that 1% people might have explored the market. You will get to know what is that, how you can create your own Holy Grail. Okay, and see, other thing is like, in case if all the 99% people knows how to create the Holy Grail, right, so the stock market would not have existed. You have to accept this fact. Less than 1% people are earning from that 99% of the retailers. That's the reason the stock market is running. If it was the other case, all the 99% of the people are having their own Holy Grail, right, so then stock market would not have been existed. Simple. I mean, you have to accept it. So now, are you in for creating your own Holy Grail system, right? Do you want to see yourself into this 1%? Is all about this video. All right, and before I start the actual context, right, so this is going to be a bit advanced, friends. Honestly, I'm telling, because anyone who is like new to trading, right, so maybe you can just watch this video, but this is going to be a bit of advanced, because I'll be discussing about, right, some contra trades. Okay, so let me take you to this slide. So for this slide, I've created one unique, this one. Okay, let me show you. Okay, see, if you look at the screen, right, so there are like two types of traders basically. So I wanted to spend like 2 minutes on this, right? Gamblers and smart trader, right? Gambler always look out for quick profits, and you know, right, all the gamblers will come up with the big losses. This is proven, right? I mean, you all guys have might experience it. And there is, on the contra, there is someone called smart trader. Okay, his first priority is save capital and then consistent small profits. So these are the two types of traders we have in the market. Okay, so this gamblers, you can just correlate with them with 99 percentage, and the smart trader you can just correlate with 1%, right? You see this middle part, right? So I would say you and me, we should stand in this middle part. So let me just change the color. So intentionally I've what do we say, graded it as with a black color so that you should see. And then okay, so this is all about I wanted to spend, right? So you and me, we should be standing between gambler and, see, let me zoom up, right, between gambler and smart trader. So this is like we are super smart, right? Assume that we are super smart, because if you want ourselves to see into that 1% category, we have to be like super smart. And this is possible only when you know how to do the contra trade, how to do the auto adjusted trade, and also intraday. So don't get confused or overexcited the moment you see the intraday. This is not the pure intraday what I'm going to discuss, but definitely you can manage your positional trade with the intraday is what I wanted to explain you, right? This is not the pure intraday, because we all are positional traders, we are not the intraday traders. Okay, and that's where I got up with this hybrid trader signature strategies. So all the signature strategies what I've discussed with you basically came from these three: this contra, auto adjusted, and intraday. Okay, stay with me, right? And then I'll let you know. So now if you want to see yourself into this 1% successful community, so you have to be between the gambler and smart trader, right? Smart trader is only like in terms of saving your capital, but just in case if you want to save your capital at the same time you wanted to get with some good profit, so you have to become super smart trader. Okay, so that's where this video is all about. So let me quickly take you to, see, before I jump on to what is contra trade, what is auto adjusted traded, these are all the technical jargon, but believe me, these are all like simple words, right? I'll explain you one example, right? I'll explain you one example. Okay, so friends, do not ask any questions. I'm not even looking at the Q&A, because you can't even ask the Q&A questions. This is not straightforward topic, right, wherein we are discussing about debit spread, or we are discussing about ratio spread or calendars, right? This is entirely based on your psychology. This is entirely based on how to save your capital. So please stop yourself in terms of asking the question. So just stay focused on the content. Okay, so now I'll give you one small example. Okay, I'll just give you one small example, right? I think majority of the people might have known. So let's say the current market stands somewhere here. Okay, and you know that there is a support here. Let's say there is a support here, and there is one more support here, right? And then this is your profit, let's say. Okay, market stands here, right? Market stands here, right? So you know that is one of your favorite stock, let's say TCS or Nifty, Bank Nifty, SDFC Bank. So let's say the SDFC, any of the stock, any of the instrument stands at this critical support, and you know that this can take a bounce, this can go up. Okay, so what you do, see, basically what I'm trying to explain you is the contra trade, an example of contra trade, and then I'll take you to all the real trades. I'll show you all the practical demo. So let's say your stock stands here and you have the view based on your price action saying that market will go up, but we all know whenever we go long, market will come down. So let's take an example of, let's say you have taken a future, right? We all know, right? Just to demonstrate the example, I'm taking the example of future, but again I'll show you all the real time. Let's say you have taken the future. Okay, you all know. Let's say you went long, but the very next day market has fallen down to your first support. So obviously you will have this loss, because you went long but the market came down, but you pretty well know that there is a strong support. So maybe market can bounce back from here, right? If that bounce back from here, you can stay in the trade. But what if the market goes again down? That's the biggest concern. So what you have to do is like, simply this is your loss area, right? Already you went long here, right? Stock came here, so you are at a loss. So what you have to do is like, as a contra, to log the loss, we are not talking about the profit, to log the loss, what you can do is like, you can edge it with by selling a call. Okay, you went long with future and you have to sell a call, right, with the same, right? You have to select the premium in such a way that that should match up with your future. See, I'm not discussing how to hedge and everything. I'm just giving you the template. All right. So now you sell a call, right? Matching to the future premium. So what happens, right? Your market stands here. Already you are in loss. So worst to worst case, let's say the market again falls down, right? Be it your SDFC or TCS. So what will happen? Your future will give you loss, right? Your future will give you loss, but your call sell will start giving you profit. So net your loss is logged. That's it, right? Try to understand. If you're not able to understand, you will have this recorded session. You can watch this recorded session like 1 or 2 times. Right now, keep your mind very open. Okay, so what I meant to say is like, you took the stock here, market came down, so then you sold a call to mitigate your loss. Even market came down, your future is giving loss, but your call will mitigate the loss. Let's say from here the market is taking a bounce back. Let's say there is a strong reversal, right? Even if market falls like 5%, 10%, right? Your loss is locked basically, because your future is giving loss, but your call is compensating the loss of the future. This is called basically the contra, the auto adjusted. So when I started, right, auto adjusted and the contra trade. So let's say the market is taking a bounce back from here. So either you can exit your call here, you can exit this call here if you're a super aggressive trader, or else you have to exit your call, right? Let me explain. Or else you have to exit your call the moment the price came to your break even, because this is where you sold, you bought the long. So let's say the market came, the market has bounced back. So right now your future will give you profit, but your call will be giving you loss. But at least you are at the break even. That's it. So now if it is making a strong reversal candle, so then you can exit your call. So either you can exit your call here if you're sure about market going up, so which means you'll be like able to mitigate your loss, or else once the market comes to your break even at the cost to cost, you can just exit this call, right? And then you can enjoy the trade, right? So basically what we have discussed in last 2 to 3 minutes, like basically we have just covered, logged your loss by a contra trade. Okay, I've just given you one example. I think majority of the traders are aware of this thing. Okay, so now let me take you to the real trade. Okay, let me take you to the real trade. So let me take you to what is that, sensible. Okay, so this is my real trade, friend. So I would want you to stay focused. Okay, I would want you to stay focused, because this is a sort of advanced, right? And then see, this is my typical iron fly, which has a loss of profit of 23,000 and a loss of 6,742. If you look on Friday, right, the last Friday, market was standing somewhere here. Market was standing somewhere here. So what I thought is like, rather than doing some adjustments, what I've done is like, what is the threat of my iron fly now? When the market was standing somewhere here on Friday, yes, now the market is standing here, but on Friday the market was standing somewhere close to my break even, somewhere here. So what I have to think, right? Now my iron fly will give me loss in case if the market goes up, right? Because we deploy the iron fly with this sideways, but now market is standing here, and the moment market starts keep going up, I'll get into this my loss area, right? So what all adjustments we can do? Okay, so we can just do the reverse buying. Meaning I can get this buy leg upside and then start selling from my put, all those things, right? So which requires basically extra capital. So what I thought is like, rather than me doing the adjustments, how about deploying a contra trade? So friends, now the magic starts. How about deploying a contra trade? Okay, if you look at this trade, right, what contra trade I can deploy to mitigate this loss on the call side when your market stands here, somewhere here. So what contra trade I can deploy? I can deploy a debit spread, right? The moment I deploy the debit spread, right, this loss will be mitigated. Point number one, I can deploy one directional butterfly. So that's what I'm telling, friends. This video is a little bit advanced in case if someone is not aware of what is debit spread, what is directional butterfly, what is ratio spread. So I think they will be not able to understand, but still you can watch this video, and once you get aware of all those strategies, then you can just watch one more time this video. All right, so now, so what I've done is like, to mitigate the loss, I've just deployed a ratio spread on Friday. That's it. I've deployed this ratio spread. So this is my iron fly. Okay, watch it clearly. The second window, this is my ratio spread. Okay, so now this has 8,000 profit. Okay, and then unlimited loss. My unlimited loss will start only after 5 what do we say, 5%. See, market has to gap up by 5% on Monday for me to see this unlimited loss. Looking at the data points, market gapping up by 5% is very rare. Yes, it can happen, but the probability of 5.3%, right, 5.4% is like very rare, right? Even you just go and check the last 5 years, 10 years data, it's very rare. Basically, gap downs are very common, but gap ups are very rare. And even I'm talking about 5% gap up here, 5%. Okay, and then let's take an example. Let's take an example of a let's say wantedly. See, this is very important for you to understand. The market stands now here. Your break even is, your lower side break even is like 1%, yeah, 1.1%, and your upper side break even is 1.21%. So what I'm trying to do now is, now your contra trade starts. Basically, this is what you have to do. Let's say Monday market gaps down, or maybe market opens like flat and it goes to 2%, right? I'm just simulating the market so that I'm just taking it to 2%. Okay, so earlier this will be not modified in sensible because we are manually manipulating. So ideally this should show 2 plus this 2%. See, I've moved 2%, right? Intentionally manually I've moved 2%. So this should show 2 plus 1.1 is like 3.1% should be your break even, and 3.1 plus this 1.2%, this is almost like 5% should be your call side break even. Oh, you got my point, right? So maybe see, again I'll tell you. Okay, so again I'll reset. This is my original. This is very mandatory for you guys to understand, right? Look at this one percentage, right? This is my real trade. So my put break even is at almost like 1%. Let's take 1% round figure, and then my call break even is almost at 1.21%. So what I'm trying to show you, like I'm just trying to show you one case wherein market made a 2% downside move. See, 1%, I'm just doing it manually. So now your this break even should be 2% plus this 1%, 3%, right? So 3% is your put break even, and your call break even would be 3% plus this is 1.2. So which is like close to 5%. You got the point, right? Can someone please tell me? See, do not ask me any questions, friends. Please do not ask me any questions. I'll just open the Q&A questions after the session. But now, are you clear? Even if you are not clear, right? I've told you 2 times. You can just pause the video and watch the re-record video. Now, so basically, what happens now is, you have a loss of. So let's say if the market gaps down by this thing, right? So maybe you will be at a loss on the expiry. You will be loss of 1,472. On Monday, you will be in profit because the blue line is giving you that safety. But let's say on the expiry or maybe close to expiry, your loss is 1,472, right? So now what I can do is, like, though I have these 2 trades, this is a contra trade what I have deployed for this trade, but I'll be managing these 2 trades independently. Right, I'll be managing these 2 trades independently and not merge it as a single trade. I'll manage it too. So now I'll show you an example. So now if the market stands here, I can do one thing, right? What is my loss here? 1,472, right? I can make this, right? 1,000, let's say 500, okay, divided by 25. So I have to just cover 60 points to make my loss 0 on the call side. That's it, right? My capital deployed is only 93,000. So if the market keeps going down, I have to just cover this 60 points, right, to make my iron fly loss free on the put side. So I'll show you, right? I'll go to this is my real trade, friends. Okay, and I'm not even showing you all the premium because Monday more or less will get the same premiums. Okay, 60 points. I'll just go here. Okay, so then what I'll try to do is, like, to cover this 60 points. Okay, I'll try to sell 60 rupees somewhere. Let's say this one. Okay, so if I sell 60 points, right, and I have 2 quantities. If I sell 2 quantities, okay, this is like actually let me give me 1 second. Okay, let me also go for 1 quantity. Okay, see, the moment I've sold a naked call for 60 points, so now I made this trade 0 on my PE side. Right, again I'll get you back to that presentation, right? I'll again get you back to the presentation because this presentation is very important, friends, for you to understand. So what did I say here? Okay, what did I say here? This one, we are talking about this thing, save capital, right? I'll show you this process right? We are smart traders, so wherein our first priority should be save capital, and then if you are like super smart trader, you know how to do the adjustments, you're aware of all the strategies and everything, so then you can think about this thing. Okay, so let me again get you back to sensible, right? So now we are able to make the loss zero. Now we have this contra trade. Okay, so this is perfect, friend. This is perfect. We have made zero loss. Worst case, if the market again, see, we did not see, I'll tell you, or else, see, what I can do is like, or else what I can do is like, this is one thing, or else what I can do is like, because I'm just this requires a capital. Okay, I'll deselect this thing, I'll clear this trade. Okay, so now for me, see, for me to make this loss without deploying the capital, what I can do is like, other adjustment what I can do is like, I have 40,300, right? I'll just exit this 40,300 and I'll just move to 40,400 and see. Okay, 40,300 PE, where is that? 40,300. I'll exit this and I'll try to go to 40,400. I'm just doing this, right? If I do it by 2 quantity, okay, so this is, see, I have not deployed any capital. Okay, I have not deployed any capital, but still I'm able to mitigate my loss, and moreover I'm just getting with a profit. Forget about the profit again, because you guys will tell that just because you're doing the adjustments today, so you're getting good premiums, but on Monday you'll not get the premium. Let's assume that you do not see the profit, but your loss on the call side is zero. Sorry, put side is zero, right? So within this trade we are able to make this trade zero because our view went wrong. Try to understand. See, whenever you deploy the iron fly, right, do not firefight with the market saying that, I mean, see, irrespective of market going up or down, I have to come with the profit, right? Your view went wrong. So now you have to save your capital. You have to minimize your loss. So this trade, you are able to minimize your loss, right? So what will happen with your contra trade? This is what you have to do, friends, right? So now just keep an eye on this thing, right? Your break even is 2.18%, right? Keep an eye. Okay, I think for a few people it will be like difficult to understand, but this is not at all a rocket science, right? If you know what I'm telling, right? If you know about what is ratio spread, what is iron fly, what is a contra trade, you'll be able to understand. Even if you're not able to understand, friends, you'll be having re-record video, you can watch that, right? Now, see, you have already 2.8% is your break even. So from this position to this position, you have 2.8%, and check here 5%, friends. 5% is your call side break even. So your unlimited loss will start from this 5%. Got it? So market has to make a move of 5%. Okay, sorry to say 5%, even maybe at 4%, right? As and when we go to expiry, so this blue line will like become flat, and flat this will cover. But let's take an example of saying that, okay, not 5%, let's take an 4.5% or 4%. Okay, so from market condition from here to get into this unlimited loss, you have market has to move a 4.5% gap up, right? So now when bank nifty went 2% downside, obviously even this will be go down 2% downside, right? Stay with me, friends. Do not quit this video. I know this is like bouncing, but this is what the contra trade. Believe me, if you do this type of trades, you will fall into this category. Believe me, this only 1% of the traders. So sorry for deviating from topic. You take the name of so-called successful trader, right? Manu Bhatia is there, right? PR Sundar. I mean, there are like so many traders. They make a lot of money. How do they make? Because they have their own signature strategies. They have their own holy grails. They will not reveal it to market because it's not a magical actually. Because they might have spent like huge amount of time in the market, right? By learning from their mistakes, by exploring the market, by deploying contra trades. I mean, it can be contra trade, it can be auto adjusted trade, or else it can be like ABC, XYZ, anything, but they have their own system. That's the reason, right? This 1% of the successful traders are getting crores of profit from those 99% of the retailers, because those 99% of the retailers will not put this much of effort. For them, they act as a gambler. That's what I said. They act as a gambler. So the profit of all these gamblers, or the investment of all these gamblers, or the profit of the smart trader and the super smart trader. Okay. So if you're not able to understand, that means you're still a gambler. If you're able to at least understand 30-40%, you are either a smart trader, right, towards the smart trader, and in near future you'll become a super smart trader. Okay, again, sorry, let me get now, right? If your iron fly market went 2%, obviously, right? Even this is bank nifty, so bank nifty will come to 2%. Now your actual contract rate adjustment starts. This is very simple, friends. Now what is your loss actually here? Your loss is only 1694, right? Remember, we made this zero, not even considering this 1800 as a profit. We made this zero, the iron fly. Now comes the magic. Okay, see, if you have deployed two lots of iron fly, so what capital do you need to have, right? We have discussed already, we have made a video, right? So one iron fly will require 2 to 2.5 lakhs. All right, so we have deployed two iron flies here. I've deployed two iron flies, so you might have need like 4 to 4.5 lakhs. All right, how much you have deployed? You have deployed 1 lakh in your iron fly. All right, and then how much you have deployed here? You have deployed almost like 1.24. So 2.24 you have deployed, so you have another 2.5 lakhs with you. All right, so you have another 2.5 lakhs with you. Okay, so now I'll show you what adjustments you have to do, right? So now market bank nifty stands here, friends. Bank nifty stands here. So for you to get into loss, this unlimited bank nifty has to make a 5% plus. Market as was here, market moved to 2% down, so 2%, so almost like 7%. Okay, 7% market has to make a move from this position for you to get into this unlimited loss. Because I'm just telling, because we are our conservative trader, right? Which is very rare. Have you seen any time, right? Market gapping up by 4%, 5%, 6%, 7%. So we are safe. Looking at the probability, we can say that 95% we are safe. Yes, anything can happen, right? This 7% down can happen because lower circuit is very common. Have you ever seen upper circuit in your entire this thing, right? Lower circuit, 99% it will be like lower circuit. That's the reason I go with ratio spread, called ratio spread, because market gapping up is very rare. Okay, let me delete all these things, or else now so you have deployed 2.25 lakhs. Okay, 2.25 lakhs into your trade, and you have another 2.25 lakhs with you. Okay, so now what I'll do, so simply stay with me, friends, right? I'll exit this now, 42,500. I'll exit this, because when the market came 2% down, definitely this will give you profit, because this is a call. So this is a second call sold position, right? Ratio spread is like 1 buy, 1 sell and 2 sells, right? I'll exit 42,500 and I'll come to 42,000. That's it, right? I'm trying to make it 1:2. Okay, stay with me. Now your loss is almost 1,694 on the P side. Okay, 45,200. I'll go here. Where is 45,200? Okay, 45. Sorry, what was that? I'm very bad at numbers. Okay, 42,500. Okay, right. See, I'll exit this 42,500. So I've sold, right? So I have to buy back, and then 42,000 I'll sell. But that was 42,000, right? Yeah. So now see what I've done. I've just exited 42,500, and I've moved to my first sold position, which is 42,000, but I have to go for 2 lots, right? See, the moment I've done this, okay, now check. You're able to mitigate your loss to 0. So by this, I've just proven you that we can save the capital. At least we can save the capital. So what is the capital? Still, your capital is not even increased. So you have another 2 to 2.5 lakhs with you. Okay, that's what we have done, right? 42,500 call I've sold, and then 42,000 I've moved. Okay, now, right? So on any given day, you are going to get this 1,000 profit, right? What did we discuss? First, I thought of giving you clarity, saying that, boss, on any given day we can make our trade green, right? We have made this trade green. I'm not even considering this 1,700 plus profit, because you guys will tell that we will not get the premium. And even here, I've made my trade 0. Okay, anyways, I'll get my profit of 1,000, and market has to make a move of 7% for me to get into loss. But if you genuinely think that if market comes here, right, still have the potential of getting 6% if I'm able to trap market somewhere, right? So when I say 7%, market can come to here also, right? Maybe 7%. right? 7.5% is here. Market expires at 7%, which is rare basically, but still you have the potential of getting 6% profit. But forget about this thing. Now what I'll do is like looking at the probability, right? Market making a gap up of 7% is very rare. So what I'll do, why can't I increase my sold position just to increase the profit here? So right now, keep a check, right? I'm just increasing it to 3, friends. I'm just increasing lots to 3. The moment I've done this, see your profit now, right? Yes, your capital will increase, but I'll show you one magic now, how to reduce the margin. Your capital has drastically increased to 3 lakhs, right? 2.88 lakhs, but still you are getting 1%, more than 1%, right? 1.5%, even though your view went wrong. Okay, now what I'll do, why not I can just increase the lots to 4, because my maximum loss will start only when the market goes by 7%. Even if market expires here, even if market goes down, make a circuit, how much of profit I'll getting? I'll be getting 5,444 on the expiry on a capital of 4 lakhs. But now some people will complain me saying that boss, I do not have the capital, right? I've already made a video how to reduce the margin. Okay, let's try to reduce the margin and see. Okay, now what I'll do, I'll just go to add. I'll try to sell a deep OTM, which is like trading at 10 rupees or 8 rupees. Let me sell this. Okay, the moment I sold this, okay, I'll uncheck this one. Initially your capital was 4 lakhs, right? The moment I've added one edge of 10 rupees, how much is 10 rupees, friends? You'll be surprised. Already I made a very big detailed video. 10 into 25 is like 250 rupees. By giving 250 rupees extra, you are able to minimize your capital from 4,07,000 to how much? 3,41,000. So I'll just increase this to 4. Okay, 2. Let me show you, right? The moment I increase it to 2, I'm able to mitigate my loss, my capital to 2.76 lakhs. Okay, let me get it to 4. Okay, so now 1.75 lakhs. So this is your 1.75 lakhs and your original iron fly is at 1 lakh. So you have spent only 2.75 lakhs. You have another, how much? You have another 1.5 lakhs with you. So why not you can just increase this to 5 lots? Because see, I'll tell you, maybe you might be wondering, right? You might be wondering, why is he selling so many calls? Because boss, your unlimited loss is after 7% profit. Sorry, after 7% gap down. This is where you need to take a chance. See now, your profit is 6,671 on a capital of 2,65,000. So you calculate it, right? 2,600 would be 1%. So you're getting almost 2% profit here. Okay, so your capital is still 2.65. So if you want, you can just increase your buying position to 6. Okay, and then see 2 lakhs, right? Even your capital is not reduced. Basically, see 2 lakhs, you are able to get 3% profit, friends. You're able to get 3% profit, right? Because 2 lakhs is your capital and then this is your 1 lakh, 3 lakhs. So you have another 1.5 lakh capital with you. Okay, so now I'll just leave it to you if you want to go to increase this and if you have some extra capital. So I'm just telling you, people who have like 4, because one lot of iron fly will take 2 lakhs to 2.5 lakhs, that we all know, right? Yes, if you're reducing the margin, right, from 2 we came to 5 lots. So you have another 1.75. On top of that, if you have like another 5 lakhs with you, who is stopping you to go for naked selling? Many of the people will ask me, this guy is telling very risky trade. Boss, again I'm telling you, see, check the probability. Your break even is at 7%, 7.5%, right? Are you expecting the next day of 7.5% gap up? If yes, you can just quit this video. At least if you're expecting 3% gap up, I would say rather say yes, this trade stands valid, because 3% also your trade will be able to sustain the momentum. See, even if the trade comes to 3%, still you are in profit of 4,458 on Monday when the market opens. Yes, there could be some deviation.Maybe instead of you getting 6,000, you might end up getting only 4,000 or 5,000 profit, because I'm doing that simulation today. There could be a plus or minus of only 10 to 20%, but if you are deploying now, right, you got my point, right? Now again I'll tell you the other magic. This is done, right? On any given day, we are able to make 3% even though my view went wrong with a weekly trade. I'm not even discussing about monthly trade here. And the other magic I'll tell you. Let's say Okay, let me delete this, right? You still have this trade, right? If you are fortunate, right? Whenever the market fall like 2%, right? Or 3%, right? It can also bounce back, right? It can slowly bounce back. Just in case if the market bounce back by 2% and 1%, if you are able to trap your market somewhere in the middle, or this side or this side or here, you will still get with good amount of profit within your original iron fly. Let's say if the market goes by like 2%, 2.5% or 3%. Let's say 3%, you will get 20,000 profit on a capital of 95,000, which can happen if you're trading like 10 weeks. Even if you're able to trap the market one time into this green zone, right? What did I say? We consider this trade as a zero trade. But if the market takes a U-turn, see, I mean, all miracle things will happen, right? If market takes a U-turn, if you're able to trap the market here, you will get 20,000. You do the calculation. What is the 20,000 on a capital of 95,000? Let's say the market expires here. Forget about it. Still, you will get 10,000 profit on a capital of 95,000, right? How much is that? 10%. Okay, and let's say the market has expired here, you'll get still 6,000 profit. Let's say the market has expired here, you'll still get 12%, 12,000 profit, 12,000 profit. And let's say if the market, see, this will give you profit, right? Let's say the market will give you, right? Let's say a market has given you like 4%, because when we started, this is 2% plus 1% plus here, let's say 4%. Even if your market gaps up or goes by 4% upside, this iron fly will give you 14,000 profit. And also, see, check your 4% profit, 4% will be somewhere here, so you'll get another 6,176 profit. Hope you are able to get, I mean, you're able to get the context what I'm giving, right? I'm just trying to, right, tell you all the feasible, what do we say, the market conditions, right? So without increasing the capital, end of the day, 2 lakhs plus your 1 lakhs, you still have 1,75,000. I can still go by 7 lots also, right? I can still go by 7 lots. Check my profit, 10,000 on a capital of 3,75,000. This is ideal, right? 3,75,000 plus this 1 lakh, right? So this is ideal. So I'm getting, even if my view goes wrong, I'm getting 10,000 profit on a 4 lakhs capital, which is almost like 2.5 to 3%. And if the market takes U-turn, right, so there is no limit for your profit. You'll get with good profit. Okay, we have seen with the lower side. Okay, we have seen with the lower side, because rather than me doing the adjustments on my iron fly, I can just deploy a contra trade also. See, basically, even I can do the adjustment here also. When the market falls down, I might have done the roll up the put, and then I'll start selling the call. See, the same thing, right? See, I'll show you, right? If I've not deployed this trade, I'll show you, right? What I can do, right? Now, let's say the market is standing here, right? So I can just sell some naked call from here, right? I'll become more aggressive. Let's say, let me delete this one, or else let me uncheck this one. So now, so when the market is falling, I can sell some aggressive calls. So even that will increase your premium capital, right? Let me show you, right? What is this loss actually? 6,475. See, friends, you got right. Again, see, needless to say, right? Because I've shown you hundreds of videos wherein I've shown you like how to sell the naked. So whenever you're selling the naked call, obviously that will increase your capital. Point number one. So rather than me adjusting my original iron fly, why not to deploy contra trade? This was my contra trade, right? I've deployed a ratio spread. My loss was only 1,694. Okay, so the moment market went down, yeah, we will see one genuine case now. Okay, I'll delete this thing. I'll get the market to reset. I'll get it to original shape, right? Even I'll just reset. Let's take an example of a other case on the upper side. Okay, so let's say market came by 1.48%, let's say 1.5%, friends, right? So your loss on the expiry would be 6,472. If you look at the black color box, your loss would be 6,472, right? 1.5%. So what will happen, right? If market makes a move off, right, you will be like still in loss, right? This will be your loss, 6,472, and even you'll be lost. But I will not leave this 6,000, right? See, if market, let me show you, right? If market, this is the other way, I'm showing it on the upper side. Let's say the market stands somewhere here. So what I'll do I leave this trade as it is, right? What I can do, I'll roll up I'll roll down my call position. Let me show you. What is this? 41,400. I'll book 41,400. I'm showing you the other way. When I say I have to buy this, and let me, sorry, and let me, what is that? So I have to buy, and then let me, sorry friends, what was that? 41,400. So I have to roll down basically. So this is okay. I have to sell this basically. So I'll exit 41,400. 41,400 I'll exit, and then I'll try to roll down by 41,300. Okay. I'll just make this quantity to 2 because I'm trading with 2. From what was my original loss? My original loss was actually 6,472. But just getting 100 points rolled down, I'm able to get my loss to 3,172. Okay. If I know that if market keeps going up, I can just do one more roll down. That's it. By making it to 41,200, I've made my loss 0. Yes, I know I'll be not getting this premium, but at least let's say my loss is only 600 or 700 on the call side. Now, what will happen with this trade? Right? If let's say if market expires somewhere at 2.5% or 2.6%, my loss is only 122 or 300, 400. But what if market expires, right? Even Bank Nifty will come up, right? Starting from year till year, you have the potential of getting minimum profit. From this sole position to this sole position, you have the potential to get 8,000 profit on a capital of 1,24,000. So that's what I said. Whenever I'm doing the adjustments, though this is a contra trade, though my ratio spread I've deployed this as a contra trade, but I will never merge with my iron fly. I will look these two trades as a two different trades, and then I do the adjustments independently. That's what I call this as a hybrid trader signature strategy. I know you people will not believe. Because just because I'm not a big trader, this is where I got with the signature strategies. My signature strategy is nothing but all the contra trades, auto adjusted intraday. I've made like 3 to 4 signature strategies. One of the signature strategy was your twin brother strategy, Bajaj and Bajaj Finserv, Nifty and Bank Nifty, HDFC and HDFC Bank. Because whenever I deploy those two trades, one I'll go with CE ratio spread, the other I'll go with PE ratio, put debit spread. That's it. I'll manage them both differently, and I will be, honestly I'm telling, there are like couple of viewers from my YouTube channels where they are making consistent profit with the signature strategy. That is not at all a rocket science, because see, when I say hybrid trader signature strategy, that is a combination of your contra trades, right? Each trade will manage. So don't you think this is a contra trade, friend? Don't you think this is a contra trade, right? This is trade A and this is trade B. Trade B will act as a contra trade for trade A. Trade B will act as a auto adjusted trade for trade A, right? Let me take you to this thing before I get with the Q&A. So now I have one final presentation. Again, I'll show you, right? This is what is contra or auto adjusted. Okay, I want you guys to read this. It's not a rocket science. When I say hybrid trader signature strategy, it is not at all a rocket science. Believe me, if someone has believe in my content, right? If someone wants to explore the market, you will also come up with your own contra. What you need is like Holy Grail exists, but you have to create it on your own. Okay, all about mindset. Contra and your auto adjusted is all about your mindset, by which you should open up your thought process. You should think. See, this is one of the thing what I've copied from PR Sundar. I'm not sure whether PR Sundar has made this a quote or he has copied from somewhere. Yeah, but what he said absolutely makes sense. This is the only quote I follow from PR Sundar, but I'll not even watch any other video, right? Do things differently. That's it, but not different things. He has a very meaning. The only thing is like you have to start combining your strategies to protect your capital first. This is very important. Unless and until you have the the knowledge of all the strategies, your directional, your non-directional, if you are combining your directional with non-directional, non-directional with direction. This is what I've done in last 7 to 8 months. People, many of my close friends say that Ravi, you are trying so many strategies. I will not even try those strategies. Yes, what I feel is like I am doing the right thing, because with just 2 to 3 lakhs of capital, I'm just playing with all the strategies, you name it, because I've made like end-to-end series on debit spread, ratio spread, calendar spread, iron fly, butterfly, what is that, see there are like, iron condor, because I wanted to experience all those strategies which will help me in terms of preparing a khichdi trade. That khichdi trade is nothing but the contra trade or the auto adjusted or the hybrid trader signature strategy. Unless and until you have good knowledge on all the strategies, you'll be not able to do the adjustments, because, and this is very important. So combining the strategies to protect your capital first, and then even this can be used to lock your profit. It is not always all about saving the capital, it is also used for locking your profit. And then playing intraday to balance the positional trade, this is one of the important concept I wanted to explain with you, right? I'll just explain you after like 5 or 10 minutes. And best for the contra trades and the what do we say, the auto adjusted trades are the best for office goer people, right? Who is a better example than me, because I'm a passive trader, I'm not a full-time trader. I don't glare the screen at all whenever my trades are there on, believe me friends, just because of this concept, just because of this contra concept, I do not monitor my screen. So let me get it to original position, right? Even I'll remove all this thing. Yeah, this is my original. So I pretty well know that, let me reset this, okay, and also let me reset this, right? I pretty well know, so I'm safe till 5, 6, 7% of 5% of the gap up. I'll put an alert whenever the bank nifty goes up by 3% or 4%. I'll not even glare at my monitor. I'll not even monitor my system. Whenever you monitor your system, you'll mess up your trade, right? So when I say this point, right, best for office goers, that's the way I'm making consistent profit from last 6 to 7 months. So when I say consistent profit, yes, I'm showing only 1000, 1500. So wait for some days, friends, with your well wishes, right, and everything. So I'm planning to scale up my capital. So then if your support is there, if I'm like very fortunate, even I'll try to show you like 4 digits, 5 digits, 6 digits. Okay, I'm not telling you with overconfident, I'm telling you with confidence, but I need another 6 months to another 1 year, right? Peace of mind. When you have these contra trades in place, you will have peace of mind. End of the day, you have to sleep. See, the day before yesterday we saw, right, the moment we had some event at the US, SGX Nifty was almost like it went 3% down. Tell me how many of you have slept well. In case if you add puts, if you have sold the puts, right, you know that panic situation, right, you'll not even get this sleep. So that's where I'm telling, this is peace of mind. You will not even get panic, and your threat is only on the gap up side. Your threat is only on the gap, because I deploy the ratio spread, they call ratio spread. And this is not the only trade I'm showing you, friend. This is not the only trade. Okay, I'll show you 1 or 2 examples, but I'm not sure whether what's the time now. Yeah, we have another 20 minutes. We'll try to wind it off by 10 o'clock. I don't want to extend this video. I wanted to cover you how with the intraday you can just manage your position. Okay, so let me cover one more this thing. Yeah, no panic. And the key for this contra trade is selection of premiums and strikes is the key for the contra trades. You cannot blindly deploy a call ratio spread the way we have done it. Like, right, let's say you have the iron fly and you went and you blindly deployed a call ratio spread. That would not work. You have to see what is the percentage where my loss is starting. In my iron fly, my loss starts at 41,420. So you have to just deploy the trade in such a way that, right, your loss should be covered. When the market goes down, I can just make this loss zero. You even have to say, when the market keeps going down, I should be in a position to mitigate this loss. So you should have all those plans ready with you. Okay, so okay, not deviate the topic, I'll take you to this topic. Right, when I started the presentation, I said intraday, right? Contra we have discussed, auto adjusted we have discussed, and now let's go for the intraday. Within 5 minutes I'll complete that. Okay, now let's say this is your typical iron fly. Okay, so many people, what they do, they will try to manage the positional with positional. But what I would say is like, boss, try to use the intraday skills, right, to manage your positional trade. So let's say the market, stands somewhere here. Right? So now you are going to your loss area. Got it? So now you are going to your loss area. So you have to do something. What will we do? We try to sell a naked put from the opposite side, or else we'll try to give some extra debit and we'll roll down this buy position so that we'll be able to mitigate the loss, or else you will deploy a broken wing fly. We do all these things. But has anyone given a thought of why not we deploy a debit spread? Friends, 1 second, let me just give a quick check. I mean, you guys are able to hear my audio, right? I mean, because when I go into flow, right, I'll not even look at the Q&A sessions. I'll give like 5 or 10 seconds pause and let me see the Q&A, which I have on my another machine. But are you guys with me so far? So there will be a lag. Okay, let me see. Is clear. Okay, someone has Naren has replied. Okay, so because whenever I talk, right, I cannot stop myself, and there is complaint from many of the viewers saying that your videos are getting extended. See, guys, try to understand. This is not a paid video, right? See, end of the day, what happens? Only 2 to 3 minutes, or at max 5 minutes of the video will get extended. But try to understand. This is for all those new traders. This is for all those new traders. So that's the reason I keep reiterating, repeating. Okay. Now, okay, let's come back to the topic. So this is your iron fly. So let's say your market stands somewhere here, right? So now your loss will start from this area, right? The moment the market makes a movement of another like 0.5%, your loss will start. Yes, we can sell a naked put from this side, we can deploy a broken wing fly, we can get this buy position inside so that your loss will start. So how about deploying it intraday? So what all things you can deploy here? You can deploy the ratio spread, you can deploy a debit spread. So let's try to see and deploy a debit spread. Okay, so what is your break even? Your break even is 41,300. Let's take an example of 41,300. Okay, so let me take you to duplicate. Okay, rather let me show it here, right? So when I want to deploy a debit spread, I'll not deploy at 41,300, because whenever we deploy the debit spread, we go by OTM, right? So if I'm deploying 41,300, my profit will start only from 41,600. So now what I'll do, I'll try to deploy debit spread at 41,100 and see how it will do. Okay, I'll delete this thing. Okay, so now I'm trying to deploy a intraday with very strict stop loss. Guys, this is going, I mean, you believe me, right? This is going to be like one of the paid content what I'm telling to you, right? Stay with me, right? You have stayed for 45 minutes, stay for another 15 minutes, friends. Okay. Okay, so now what did I say? The market stands here. I'll go to 41,300. Let me go for 41,100. I'll deploy a debit spread. Okay, 387. And then what is half of this thing? Right, let's say 400, so somewhere around 200. So let me sell this. Okay, and let me make it double quantity. Okay, that's it. See, now let's say on top of iron fly, you have deployed a debit spread on a intraday basis. This is on a intraday basis, friends, not on a positional. Now, what will happen if the market keeps going up? If the market keeps going up, your debit spread will see. Yeah, let me deselect this, right? You add a loss here the moment you deploy the debit spread. Okay, the moment you deploy the debit spread, your loss has been mitigated to profit. So if the market keeps going up, you will get into profit because your debit spread will start giving you profit. Yes, what is the drawback of this thing? Let me show you. Deselect. Initially your loss was 1,400 on the put side. See, this is the right. Your loss was on 1,400 on the put side. The moment loss here was 6,000. When you have deployed the debit spread, your loss has increased on your put side. But this is your testing side. First, you have to think about the testing side now. Okay, you have to think about the testing side now. See, check. If the market keeps going up, you do not have any issues because end of the day, your profit will increase, right? Debit spread will give you profit. Let's say worst to worst, your market, the moment you deploy the debit spread, market keeps falling. So what will happen? You have to put a strict stop loss. See, 387, right? The moment this 387 becomes 350, that I'll just leave it to you, this stop loss. Whether you want to take a 25 rupees stop loss or 50 rupees or 75 rupees, it's up to you. But the beauty of this thing is, right? If the market is going up, you'll get with profit. End of the day, let's say the market stands here. End of the day, you have to exit your debit spread, because what is debit spread? Debit spread, you are acting as a option buyer. You should not hold the debit spread because you are deploying the debit spread on the basis of intraday. So you have to book your profit before 3:30 because this is just a intraday. Because next day when the market opens, you know, if it is especially on Tuesday, Wednesday, you'll have huge theta decay. So all your profit what you have earned in your debit spread will go into vanish. That will go into zero. Right? This is purely on intraday basis. Right? Going upside is no issues at all. End of the day, the moment you exit your debit spread, your profit, your loss, everything, you'll get some profit. Now, let's say the market comes down. Right? Why did we deploy the debit spread here? Basically because market was going upside. Right? Let's say the moment we deploy the debit spread, the market went like 10-15 points and then it started retracing. Right? It started coming. What did I say? You have to put a strict stop loss, 20 points, 30 points, 50 points. The moment this stop loss is hit, you exit this debit spread. That's it. You have to exit this entire debit spread. So by that time, what will happen? I think all the smart traders might have got the context what I'm about to say, right? If market is falling, you have to accept your debit spread loss that can give you 200, 300, 400, 500, 600 loss. But the moment you exit your debit spread, again, the market will stand somewhere here, right? Again, your iron fly will become balanced. Not exactly here, maybe somewhere here. The moment the market comes here, you have to exit your debit spread. What did you achieve now? You were able to, right, manage your iron fly by just giving 500 600 rupees of debit, right? You are able to get your trade balance. Check the profit here. If the market expires somewhere here, you'll get huge profit. That's the beauty of the iron fly. Iron fly will give you huge profit in case if the market expires between this green area. By just sacrificing 600 rupees of debit, you'll be able to get into good amount of profit. Check the profit here. You'll be able to get to 13,000 profit on the expiry, or else maybe like 1,800 on the same day by just sacrificing like 700-800 rupees. Okay, and again if the market keeps going up, right, what you can do, you can just deploy one more debit spread. Just try to play in the intraday, and end of the day, so the moment the debit spread is giving you the profit, you have to exit the debit spread and then you plan to sell naked put from here at the end of the day, for the just reason being to get that overnight theta decay. You got my point? Intraday, play with option buying, and this works very good on the lower side. This work. Okay, now let's talk about the call side, right? Call side, let's say your debit spread has given you good profit, 320 you exit your debit spread, and then 320 you just go for one naked selling, because the next day you will get the theta decay, right? Just in case if the market goes up, or if market opens flat, or even if market opens like 0.2% gap down, you will get the theta decay on the overnight. And this will work very good on Tuesday, Wednesday and Thursday, because Wednesdays and Tuesday, Wednesday during the overnight you will get more theta decay. We have discussed many a times. Alright friends, so this is what I wanted to convey you, and this works very good in downside market. Let's say your market stands here. Let's say take the example of iron fly. This works miraculously good in. So let's say you have a loss here. Okay, let's say you have a loss of 6,000. Let's assume that this loss is on this side. Never even think to deploy a naked call during the intraday. See, I discuss this with many of my friends. Whenever the market is falling, don't even think to deploy a call side. I mean, what I meant to say, don't even try to sell a naked call, because when the market is falling, your VIX will increase. Increasing VIX will not decay your call sell. Rather than that, what you have to do is, like on the intraday basis, you have to buy a put. When the market is going down, right, you know, right, the put premiums will increase like 2 to 3x times. The profit what your call will give you, the same profit if market keeps going down, and if you have a put buy, this will give you 5x more profits than your call side, because call side premiums will not decay, because the premiums will increase with the falling market. So during the intraday, go for option buying, go for put buying. The moment you see a good profit, exit the debit spread and then try to sell at least the naked call, because you have the advantage of getting the overnight theta decay. And the next day morning when the market opens flat, exit this call with a profit or loss, and then if the market is going still down, go only with put buying. Believe me friends, Many of the folks will not accept this, saying that why put buying on the put side. Try to remember this golden rule: market falls, VIX increase. That's it. Increasing VIX will support only the option buyer, not the option seller. So when the market is falling, you have to wear the mask of the option buyer, not the option seller. Try to understand. If you are a option seller, do not have that. What do we say that? What is it that I'm not getting that word actually, right? Saying that I'm an option seller, so not by the option buying, right? If you're against the option buying, see, you have to be a very smart trader. So when I started the session, right, this is what I want to say. Okay, so you wanted to become a smart trader or you wanted to become a super smart trader? If you wanted to become a smart trader, I've shown you how to save your capital. How to save your capital by just doing some minor adjustments. If you wanted to become a super smart trader, go for contra trade, go for auto or just a trade, go for intraday, go for my signature strategies. You got to know this is the last video for my signature strategies. Many of the people do not know the advantage, the benefits of the signature strategies, because they think signature strategy is all about just two trades, boss. Deploy two different trades, manage them independently, do not mix up. You have to manage them two independently. Ratio spread has to be managed by like a ratio spread. Put debit spread has to be managed by. So friends, I'll give me 2 minutes, right? Then I will conclude the video, right? I'll tell you one more example, right? I wanted to hear from you guys, right? Do we have the listeners? Okay, viewers, so at least I have 55. Glad that I still give me 2 minutes. I'll just explain you, okay? See, I'll tell you one example, right? The same. See, now I'm not talking about a trend brother. I'm talking about the same bank nifty. So let's say I go for ratio spread in bank nifty. Simple, friends. This is my bank nifty. Market stands here, right? Your bank nifty, right? I'll complete the video, friends, right? Within 1 hour I'll complete, right? And let's say you went a put debit spread in same bank nifty. Simple, friends. Even this is bank nifty, right? Now I wanted to ask question to yourself. Market stands here, okay? What will happen if the market, see, the way you have to deploy your ratio spread is like, what is this? This is your buy, one sell, and this is a second sell. You have to deploy in such a way that your loss should be zero if market stays where it is, or even if the market keeps falling. Okay, you have to deploy your your put debit spread in such a way that you should have 3% profit. I mean, 1:3. One should be your loss. Let's say 1,000, 3,000 should be a profit, or let's say 3,000 is your loss and 9,000 should be a profit. So now let's take an example. Scenario number 1. What will happen if the bank nifty falls, expires in this green, right? You'll get with, so forget about, I'm not even discussing here about bank nifty and nifty. I'm discussing about only bank nifty. If you want, you can deploy this trade. But again, I've told you that you have to do your own adjustments, right? Scenario number 1, bank nifty has fallen down, 9,000 profit you got. Here you will lose only 0. Point number 1. Okay, I'll take the other example. Market stands here. Scenario number 2, bank nifty, you're able to trap the bank nifty, the ratio spread, right? Somewhere from this sold position and this sold position. Your profit will be like 6% here, maybe 5 to 6%. Your loss will be only 3%, right? So you lose 3% here. Net you will win 3% here. So 6 minus 3, you will be still in profit, right? Two things what we have discussed. Right now, can I delete this? Okay, right? I'm just discussing about this thing. Now, third scenario. Again, people will ask me, what if bank nifty expires at the same position, right? You know, because I've shown you this scenario on the downside, on the upside. Now, let's say the market stands as it is, right? Do you think bank nifty can stop at the same position? Go and check post-COVID, right? I mean, do you think the market will stand for the next 7 days at the same position? 2 to 3% is the probability, right? But still, I'll tell you, this you will get 0 loss. All right, maybe this you have to start doing your adjustments. So what you can do, this you have this 3,000 loss, right? The moment you sell one more sell here, the moment you sell, make this a ratio spread, but that's it. You will be able to decrease your loss here from 3,000. You will be able to make it 1,500, and then try to get this sold position slowly 100 points down, 100 points down, 100 points down, and get it till here. This 1,000 loss, you will be able to get it from your ratio spread. So net, either you will get with 0 loss, or else with 1% profit based on your adjustment skills, or else, right, let's say, or else you can get with more profit. But I would say even if you're able to get with zero cost to cost for week 1, week 2, week 3, week 4, if the market ends in this zone, or if the market ends in this zone, you will be making 6% profit. Here you will be making how much? Forget about debit spread. Here you will be making more profit. So within a 1 month also you're able to make 6% by losing 3 trades, but by converting your 3 trades to 0. Alright, so friends, I think see, it's very difficult for me to explain everything. Okay, so I'm not sure whether you guys are able to get it or not. So let me conclude this session. Right, so again I'm repeating, does the Holy Grail exist? Yes, the Holy Grail exists, but you have to create. The Holy Grail has to be created on your own. Only 1% of the successful traders are enjoying that Holy Grail, because this 1% people will be getting that profit, huge profit. When I say profit, it's huge profit, right, from those 99% of the gamblers or the retailers who are losing. And if you want to see yourself into that 1%, right, you have to explore the market. So then you have to go for this contra trades, and you have to, let me show you this one. Okay, this is very important slide. Okay, don't act as a gambler. So if you want to become a smart trader or super smart trader, if you want to become a super smart trader, you have to be like very good at contra, auto adjusted intraday, and then use a signature strategy. And now I'll just give it a call. So sorry, I've taken like 6 minutes of your extra time. And see, the only thing what we can do is like friends, let's stop the video here because I have to go out now. Any questions you have, please ask in the comment section. Can you guys please give it a like, because I see only 32 likes out of 60 participants. Can you please give a like? And also if you have any questions, okay, you can just put it in the comment section. I'll ensure that I'll reply to all the comments. If you want one more follow-up session on this thing, I am open to do one more webinar, because within 1 hour I cannot explain you the Holy Grail, right? Because I've done my best. I think I've done my best in terms of delivering this content within 1 hour. You saw, right? I said the moment I started the session, I said this is going to be like advanced, because I've shown you like upside, downside, how you can play with the intraday, how you can play with the contra trade. I mean, I've shown you everything. Now, if you guys have any questions, ask me, or else you can just put it in the comment section. But tell me one thing. I mean, was this session helpful, or it was like too bounce? It was like bouncing very thing, or you guys were unable to understand anything, or you were able to get it by watching like another like 1 or 2 times? Believe me, you will be able to get it. And I think if even one of my viewer gets up with his own signature strategies, right, I mean, I'm done for my this thing, right? I'll be like very, very happy if one of my viewers get up with own signature strategy, maybe from starting from now till like another like 3 months. All right, so finally let me look at the chat section. I've not even looked at this chat section. Okay, so friends, let's give it a quit. Okay, so I have my friend Sagar so far. Sagar, you're there still? Can you please type the message? Yes, if Sagar has left it, I think it was very, very bouncy for everyone. If Sagar is still there, he's one of my close friend actually. So we both started trading from the same day. Sagar, you're there? Okay, so I'm just getting some good reviews at least. Okay, friends, what I thought is like, before I actually planned to make this video, I mean, honestly, I'm telling you, I was not sure actually whether I'll be able to deliver or not. But finally, what I feel is like, I think I've at least done a decent work, I believe. I thought it would be a very flop show, because I'm doing it live, friend. I'm doing it live, right? Within live, there is no scope for error, right? Can you guys please, thank you. So I see 46 likes. Okay, so can we give it a call, friends? So if you have any questions, okay, you can just write it in the comment section. See, I do not see more of comments in my live webinar. I'm not sure whether that will allow you guys, because go and watch the re-recorded video and then you put all your comments over there. Okay, definitely I'll try to come up with answering. And if I was wrong somewhere, friend, if I was wrong somewhere, please correct me by the data points. Yes, premiums and everything, I'm sure you'll not get the premiums, but upfront I'm telling you will have the difference of like 10 to 20%. But I'm doing this on Monday, right? So you have only 2 to 3 days for the expiry, but definitely this would work. Okay, so last 10 seconds, we will just quit this session. It already went for 1 hour 10 minutes. Okay, so I thought of winding it off in 1 hour. So friends, please start subscribing, sharing my videos with your friends, with your trader community. Try to share within your Telegram channel, within your WhatsApp groups. Whenever I do a comment with anything in the Twitter, right, try to retweet, right? I mean, what I need is like subscribers. If I get more subscribers, so then definitely that would motivate me. Okay, so all right friends, I'm just closing the session. Thank you for joining my session, right? So starting from Monday, I'll start again making you all the videos. Okay, so maybe if you guys are okay, we can have one more session tomorrow. I'll select the topic, I'll take the poll tomorrow morning. I'm okay to take one more session tomorrow at the same 9 o'clock. Let's take one interesting topic and let's have one more live session. All right, so thank you friends, thank you for watching my video.